Good afternoon, everybody. Good afternoon and welcome to ActivTrades Monday Market Matters webinar for 3rd of June 2024. It's Paul here, and we're here to talk about trading using market structure. I hope that you've had a good weekend. Hope you've enjoyed the week. Last week away, we were back after a break due to the bank holiday here in the United Kingdom, but we're here on what promises to be a rather interesting week, okay, trading-wise, so lots for us to talk about, lots for us to discuss. As always, just before we start, it'd be a great help to us just to confirm the technology is working in our favour rather than against us. So, if you can just confirm in the chat box that you can, hear my voice and that you can see the slide, that would be a great start, ladies and gentlemen. Would really appreciate that. Always just make sure we're starting off on the right foot. Fabulous. Thank you. All that's great. Super. Okay, so today here we are to talk about trading using market structure. I'm going to share you a rather unique way of doing it, my own kind of way, my own version of it, which might be a little bit different from some, but it'll be just a little bit of an introduction to using market structure, but more of that in a moment. So let's talk about what we're going to cover today. As always, we'll give you a little bit of a Monday Market Matters, but we're going to focus our educational piece on talking about what is market structure. It would be interesting to know, of those of you joining us here today for the live session, how many of you are aware of what market structure is, and how many of you already use it or a version of it in your own trading? If you could put your answers to that or your thoughts to that in the chat box, it would be really appreciative of that. As I said, maybe it's part of your trading plan, but maybe you're new to trading, you've never even heard of it. That's absolutely fine, okay? But this is a part of the reasons for our sessions, to help educate everybody. But we're going to talk about an element of market structure. We're going to talk about how do we identify it on our chart. So I'm going to talk about how I would go about that, and I'll share that with you. And we'll talk about what do we need to be aware of when trading market structure, and always, how can we best trade it? And I think that will probably lead into a 2 or 3 other sessions that will run over the next couple of months, just to really basically to build out on that. Today is going to be just a kind of a simple introduction, just to help people get to grips and understand how I see it and how I use it. And then in future sessions, what we'll do is we'll sort of take it to the next level in terms of understanding, how you can actually trade it to the best. What are the kind of the best setups you can work from? So we'll do all of that, and then as always, we will switch over and check on the live markets as we towards the end of our session, as we start the US session in about 25 minutes. For those who don't know me, my name's Paul, traded for many years, traded for funds, traded for clients. Primarily, I like to focus on trading FX indices and commodities. I tend to be a trend trader for the longer term swing and position trades, and I tend to be a reversal trader for sort of shorter term intraday trading. What we're doing here today, of course, is, this is Monday Market Matters, and the whole idea of our session is to help you as traders start the week in the right frame as we prepare for the opening of that US market. So every Monday, 2 o'clock London time, take a look at the news ahead for the week, which is always important. We do the major element on our education piece. As I said today, it's about market structure. We'll always have a little chat and talk about the tools in terms of the ActivTrades platforms and tools you have available to you. And we also build that into looking at the live markets as we go into the start of the US session for today and for the week, and for what will be an interesting week. So as always, we just take a little look at the news, okay, coming down the pipe this week. You hear me say this every week, and I make no apology that, if you're a new trader, I don't expect you to be able to sort of, provide in-depth analysis of the news, but it is important to know when that news is coming out, right? Especially the high-profile news that may well induce volatility spikes into the markets, and it's important for you to know when those are actually coming down, all right, for the week ahead. You can do that by checking the economic calendar. There is an economic calendar available to you on the ActivTrades website, so be sure to take that out. And there are other ones on the internet, so there's no excuse, okay? And I do try to reiterate and emphasize this every week, okay? It is important to know when that news is coming out. And We're in an interesting week this week. It's the kind of, we're into the start of a new month, and every day this week there is some high profile US news coming out every single day, and that you need to sit up and take notice of, okay, and be ready to see how that impacts markets. But today we've had Chinese manufacturing PMIs, but we also will be getting American ISM manufacturing PMIs to this afternoon. Tomorrow, we've got the JOLTS job openings, okay, numbers that'll be out in, well, US morning time, but here in, let's say, UK and Europe in the afternoon. Wednesday, we've got quite a bit of data in terms of, we've got Australian GDP data, we've got the Canadian Bank of Canada interest rate, okay, decision, and people are expecting they're going to be very interested to see whether a cut comes down for that. But also, once again, we've got the American Services PMI. In the same way we've had manufacturing this afternoon, American Services PMI will be out on Wednesday. As I said, there's some American data coming out every day. Thursday, we've got Australian balance of trade. We'll also be very interested in the European ECB interest rate decision. People are going to be really kind of taking on board whether the ECB choose to sort of cut interest rates there. We also have Canadian PMI, and we also have US dollar unemployment claims. Friday is quite a bit of data coming out. So as you can see there, you've got Chinese, German, Canadian balance of trade. And also, as I said, first Friday of the month, really, in the sense of you've got Canadian unemployment rate, but also the American non-farm payrolls and the American unemployment rate as well. So, as I said, lots of data coming out this week. There's something coming out reflective of the American market every week, and so every day, apologies. So it's important to know when that data is coming out. It's important to understand how that will play out, because invariably it may have a, that might, as I said, might induce volatility spikes, and volatility is great when you're on the right side of it, but can be challenging when you're on the wrong side of it. So it pays to understand what's coming out. So there we go. That's the news. But let's dig into our education piece for today. And as I said, today is all about how could we trade using market structure. And as I asked earlier, it'd be interesting to know what, if any, knowledge or experience you have of using market structure in your own trading. Maybe you don't use it at all. Maybe you don't even know what it is. That's absolutely fine. That's absolutely fine. Everybody's on a journey. Everybody's learning what they can. But as that slide says, there are many different ways that traders can analyze, engage, and trade markets. I think the important element is to find a simple and robust way that a trader can analyze and trade markets consistently every time. But almost like having a simple routine, okay, a simple process that you can follow with consistency every single day. One of the ways you could do that is using just simple market structure, as it is a simple way to be able to analyze and trade markets. And so today we'll discuss how traders can use market structure, and utilize them in their trading decisions. And as I said, this is it's a topic that's broader than you think, okay? And so I'm just going to go into one element today, and I'll share with you some elements that I use myself, okay? We'll see how that sits with you, see if that helps you in terms of just seeing the market in new and interesting ways. So I suppose one of the first questions we'd ask is, well, what is market structure? How do we define what actual market structure is? Now, of course, if you go to social media, websites, etc., you will find lots and lots, perhaps thousands of different individuals or organizations all utilizing the words market structure, but maybe not clearly defining a specific element of how they define it. Because actually, when you look at market structure, you could define it by many, many different elements. Some people would determine support and resistance as market structure. Others would look to focus on supply and demand. Others might focus on trend lines as their way of interpreting market structure. Some people might just focus on chart patterns. Some people might focus on, let's say, advanced patterns, advanced price action elements of it. All of those could be defined as forms of market structure. Now, people could overanalyze that, and people could debate that until the end of days. Okay, in terms of which is the best form of market structure, which is the best way to utilize it. Ultimately, it is about finding a simple way that you can analyze the market and find a way to engage with it. As humans, we tend to overcomplicate things, and I hold my hand up here. Okay, I have been guilty of that in the past. And I have to say this, especially men. Okay, we tend to overcomplicate things. We kind of, instead of taking a simple idea, and just working with it, we try to overcomplicate it. And actually, really, what generally tends to help traders is just to keep it as simple as you can. All right, and we're going to talk more about that in a moment. As the slide says, personally, I would define market structure as any information that helps you analyze a market so that you can understand if a trend is in place, so that if one is in place, you can trade with the trend, but also help you trade the end and the reversal of that trend. All right, and today we're going to focus mostly on the latter. All right, today's session is we're going to look at market structure for a reversal. Next week's session, I hope you'll join us, we're going to talk more in depth about trading trend reversals, and then one of our future sessions we'll talk about using market structure to trade trends. So as I said, it's a broader topic than you think, and today we're just going to talk about understanding market structure. And as I said, I'll share with you a very simple way in terms of identifying a reversal of the trend and how you can take that and utilize that yourself. All right, but as I said, we'll also do future sessions to cover the broad aspect of it. So here's a chart of the euro against the US dollar. It doesn't really matter when it was, doesn't matter, because actually what we're looking for to try and understand is, well, how could we analyze this market? How could we basically identify that we're in a trend, or how could we identify that we were even in a particular reversal? And I could put this chart up in front of 100 different traders, and many different traders might have different ways of understanding that. I'm just going to draw in some elements here. So just as I always say, I'm a better trader than I am an artist. All right, so just bear with me for a moment as I just have a little look. But invariably, lots of traders would be looking to identify simple things like support and resistance. Okay, lots of people would be doing that to identifying it. Lots of people would be basically looking at effectively identifying highs and lows. All right, and being able to use that to identify that we were in a trend, or alternatively, how that basically reverses. Some people might just use a simple price action structure, like here we go, that you could look at as a bit of a morning star, those three candles there. That is a reversal that sets us off. And then, some people might be looking at, well, Paul, there's fractals here, and these fractals are effectively just confirming that, I'm in an uptrend as I go. So there are lots of different ways you can identify market structure. There's lots of debate about which is the best. As I said, ultimately, what we're just looking for is what is a simple way that you can analyze a market and give you the idea to either A, trade with the trend where possible, or B, identify reversals that would allow you to trade the reversal into what might be the new trend. Now, what I would say is, of course, I can just do that, quickly draw that up, because I've been trading for many years. Okay, in my eyes, I have that cognitive recognition ability that's just trained from thousands and thousands and thousands of hours of sat in front of charts, okay, and trading. And the reality is that comes from practice, and everybody has to practice a little bit. However, once you identify one or two just small little elements, small little hacks or tricks, however you call, that can help you in terms of identifying market structure and identifying how we'd like to basically to operate, and how we'd like to view ourselves in terms of the bias and the direction that we would bring into our trading for that particular session. Here's another chart. This is the US dollar, Canadian dollar against the weekly chart. Once again, doesn't give us, it's not really massively important about the time frame or the instrument, because understanding good market structure will actually help you regardless, all right? And it doesn't matter whether you trade gold on the monthly chart, or you're trading Bitcoin on a 5-minute chart, or you're trading Nvidia on the 4-hour chart. Being able to understand market structure and being able to work out how you can use that as a way and a means to make trading decisions, that's the important element. In this particular case here, what we can see is, my eyes very quickly drawn to kind of that level, which it's not on there, but I'm going to presume that that's around about 130, big round number. That in itself can be a form of market structure. And what we can see here is, you can see that we've got the fractals there. There's fractals there, okay, high fractals, lower fractals, and that can very quickly help us start to identify that, in this particular case, and it always easier in hindsight, that we were in a significant downtrend, and really, as I said, when there's a clear trend in place, we don't want to fight it. We want to basically work with it. We want to understand, okay, if there is a very clear direction, if there is a very clear bias, and if there is, well, how do we trade with that? We don't want to fight a good trend. The challenge we have is that good trends probably only show up 20 or 30% of the time. The rest of the time, markets can be either range bound, or they could be in a transitioning from a downtrend to an uptrend, or transitioning from an uptrend to a downtrend. So what we want is just a simple way to be able to identify if there is a clear trend. And if there is a clear trend, we flow with it. But if there isn't, well, then maybe it's showing us an opportunity for a reversal. And that's the element we're going to focus on a bit here today, because I think it's just something very simple that you can take away and utilize in your trading straight away. And that's what we're always keen to do here on the Monday Market Matters webinars. Just give you the tools to be able to make a big difference to your trading going forward. So here's what we're going to do. Okay, here is what you're going to do in terms of the first stage, in terms of identifying market structure and starting to identify and work with it. So whenever you open a chart, and what I'm going to talk about here today is I'm going to talk about the higher level charts, but I recognize that some of the people here today might well be intraday traders. The process is the same, you just gear it towards the time frame that you're working at. So I'm going to focus a lot on here monthly, weekly and daily charts, but perhaps you are an intraday trader using hourly, 15-minute, 5-minute, 1-minute charts. That's absolutely fine. The idea and the process is just the same. It's a fractal in that nature. It is about you just being able to focus on doing the right process, and that's what we're looking for. So first task when you're opening charts, okay, as always, draw on those horizontal support and resistance levels off the monthly, the weekly and the daily chart, and you can use fractals to help if required, and we'll look at a chart on that. Why are we doing that? Why do we care about that? Well, if we're going to execute, if we're a higher time frame trader, we're going to execute our trades on the daily chart. What we don't want to be doing, we don't want to be buying into the daily resistance levels, nor do we wish to be selling into the daily support levels when they're close. We want to know when they are, okay? But more advanced, which we won't go into today, but in future sessions, but we do want chances to trade reversals off support resistance, and what also will be order block levels, okay? So we'll talk about focusing on about trading reversals of market structure like support and resistance, and in future sessions we'll build in order blocks. What it does is it also provides a big picture snapshot, and one of the interesting things for traders is that the reality is most eyeballs are looking at daily support and resistance levels. People can talk about all the kind of fancy trading ideas they want, right? And they do, and people love it, and they get excited about it. But let me tell you this, all right? The vast majority of traders, whether they be retail or institutional, fund, etc., they will have an understanding and knowledge, and they're looking at daily support and resistance levels. People want to know where they are, and it is useful information for you to have. So because you don't want to buy into daily resistance level, you don't want to sell into a daily support level, you want to know where they are, okay, so that you don't make silly mistakes like that. And we'll look more at that in a particular moment. But this is just about us setting up some tasks to basically help us start to get an idea of what we're building, so that we can look at the charts to give us an idea. So this is a chart from a few years ago, but it doesn't actually matter, the time frame or the instrument. Okay, what it is about understanding the kind of the process. So this is euro sterling on the weekly chart, and what you can probably see is that an awful lot of levels of horizontal support and resistance are drawn in. Okay, and what I want you to also notice how the fractals, and if you're very new to trading, fractals are these little triangles. Okay, up fractals. You'll see them across the chart. I'm going to explain how we use them, why we use them, what they're useful for. But also, it's important to understand how fractals, they're very good at helping you draw the eye towards significant levels of zones. Also, in this particular case, 87.50, okay, 87.50 on euro sterling's level. How do we know it was also an interesting level? Well, up fractal there, that's a little bit beyond, but here, up fractal here, down fractal there, down fractal there, down fractal there, down fractal in that region, down fractal in that region, in that big round number, 87.50, okay, and lots of fractals. And we see that again here, 8,300, fractal, 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 all right? And the more you do it, the more you practice, 90, big round number, fractal, fractal, okay? You start to see how very often, with a bit of practice, fractals can help you draw your eye towards what the market believes are significant levels and zones, all right? This is the sort of thing that helps us, okay, start to build a picture, start to understand the market structure, so that we're in a position to start making decisions about, what is going to be our direction, what is going to be our bias. Are we in a trend, okay, like here, or are we, like you can see here, are we just going sideways? Are we just range bound there? The fractals, the price action, the support and resistance is just helping us build that picture. Okay, if we're a trend trader, well, this is what we want to be catching a piece of. If we're a range trader, well, that's what we want to be working with. If we're a reversal trader, well, we want to be looking at how to identify significant reversals. All right, all of these help us build that picture, and in doing so, we start to get an idea of how we look to operate. So this is kind of just the sort of the first part of it. I'm going to go a little bit deeper into it now to give you a little bit more insight and almost kind of like walk you through. Michael says, would you recommend candlesticks over Heikin Ashi at this stage of preparation? That's a good question, Michael. Thank you. Personally, I am very happy just to use price action candlesticks. I believe that there is enough information in a price action candlestick for me to be able to make a decision. I do recognize that some people like, Heikin Ashi and other variations of how the price data is displayed. That's absolutely fine. But personally, I think really at the start of this point, keep it simple. All right, just keep it simple. Learn a few candlesticks, okay? Learn what they are telling you. And by doing that, and then putting it into the context, okay, of understanding, how that pattern is playing out in the context of the bigger picture, the bigger environment, that can actually help you make give you enough information to make a decision. All right, as I was saying earlier, just to begin with, let's keep it simple. But I have no issue with people who might wish to use Heikin Ashi candlesticks or candles themselves. It's about finding the right element for you, but keep it simple to begin with, Michael. But good question, thank you. So, second task, once we've drawn in those kind of levels of support and resistance, second task here, okay? What we're going to be doing is I want you to look for what I would determine as either the ultimate high or the ultimate low, right? What does that mean? Basically, scan back recent price action to find significant recent highs and lows on your charts. and then we will use them to find what I would call a VB point. So stay with us, all right? We will go into this in a moment, but this is just, as I said, I'm just walking you through this, all right, as a means and a way to identify market structure to help us identify a reversal. So in the past, we have talked an awful lot about fractals. Remember, a fractal is a 5-candle pattern. An up fractal is where the high of the candle is higher than the 2 candles before and the 2 candles after. So you can probably see there's the little print there, and you'll find that on the ActivTrades MetaTrader 5, MetaTrader 4 platform. You can access that, and on TradingView, on most trading platforms you can access it. But the important thing is the high of that candle was higher than the 2 before and the 2 after. But just remember, it's not until this second candle after completes that fractal is confirmed, okay? So just always remember that, The flip side of that is a down fractal, and that is where the low of the candle is lower than the 2 candles before and the 2 candles afterwards, all right? So in this case here, the low of that candle was lower than the low of the 2 candles before and the low of the 2 candles after, but it's not confirmed until this second candle completes. And just think about what I want you to do is take a moment to think about the psychology of what's going on in the market. Think about what's going on in the market, that we have sold into that level, and then for whatever reason, price has been rejected and has bounced up there. What is that telling us about this area here? Okay, for whatever reason, it's telling us that buyers have been defending it. It's an area of demand. It's an area of support. However you wish to define it, it is clearly an interesting and relevant level, and what we want to do is to sort of take that on board and just use that as useful information. So, but remember, the second task is identifying ultimate highs and lows. So when I just look at this chart here, I would look here, that was a bit of an ultimate low there, okay? It was lower than anything else. For a period, that was a bit of an ultimate high, as was that. This was definitely an ultimate high here, okay? You can see that there. This, I would say, was, at the time, was a bit of an ultimate low, as was here. And then I'm looking here, okay, that would be an ultimate high as well. And as I said, doesn't have to be difficult, doesn't have to be hard. Just look at a chart and just basically be able to identify the ultimate highs and lows, okay? The ultimate highs and lows, because this starts to become useful information to us, okay? And it's not hard, it's not difficult. And as I said, this is a weekly chart, but this could be a 5-minute chart, could be a 1-minute chart, okay? It could be a 4-hour chart, all right? It's just it's that fractal nature that you can see it showing up everywhere on every time frame and on every instrument. So, as part of that second task, we can still use fractals, but actually for our setups, we only need a swing point. How is a swing point different from a fractal? A swing point only needs 3 candles, a fractal needs 5, okay? So in this case, that is a fractal, but it's also a swing point because that candle is higher than the candle before and the candle after. This is a bearish swing point because it's lower than the low before and the low of the candle after. It's just a 3-candle pattern. It doesn't. A fractal is 5, which is what we like, but we only really need a swing point. Okay, that's the important thing. So, not unsurprisingly, you're going to get more swing points than fractals, but that's fine. That's absolutely fine. That's what we're looking for. And you might be thinking, well, how does that help us, Paul? What does that tell us? Well, just bear with us and we'll have a little look on the next couple of charts, because this becomes our third task. All right, this becomes our third task in using market structure to help identify a reversal to give us an idea of how we could start to move into a trend. Once we've identified the recent ultimate high or low, okay, then what we do, we look left on the chart, and when we've identified the ultimate high, and then this candle here at that time, whenever this candle pushes to a new high, okay, that is a new ultimate high. That was the ultimate high there. What we do, as soon as the price has pushed an ultimate high, what we do is we look left, and when we've pushed to a high, what we're looking for is the bearish swing point, the last bearish swing point before the high, which we would call the VB. If the V before the high. So when this is the high, I'm looking for what was the last bearish swing point. This was the last bearish swing point. It just so happened to be a fractal as well, which is fabulous, but it doesn't need to be a fractal. Remember, the fractal means that that low was lower than the two before and the two after. Fractal is great, but it doesn't have to be. It just can be, okay, a swing point. So whenever price pushes to a high, okay, what we're looking for when we push to an all-time high, sorry, it's not the best drawing, as I said, I'm a bear trader. You're looking for where is the bearish swing point. This is the V before the high. All right. And on a downside, what we'd be looking for, here we go, is that, once we've identified this as the low, now we'd be looking for what was the last bullish swing point. Okay. What was the last bullish swing point before the low? So when you're looking for a high, you're looking for the last bearish swing point. When you're at a low, you're looking for the last bullish swing point. Okay, we'll look at this on the charts in a few moments. But this starts to help us. Why are we interested in them? Because these VBs, this area here, that to me represents market structure. Remember we said prices come down here and bounce away because there's an awful lot of orders there. All right, there is in this case there's demand there. Once they are broken, even by a pip, okay, they don't have to be broken by 5 pips, 10 pips, 100 pips. Once it trades through that level, let's just clear these through. Once it trades through those levels, then we are into new market conditions, and that's what we're looking to take on board. Okay, in this case, we can see we have the high price traded down, traded through the VB, and then it reacted back up. And that starts to give us an indication of being able to how to trade a reversal, okay, of this trend. So, as I said, whenever you're in a whatever, this, as I said, there's no time frame on this. Maybe this is a monthly chart. Maybe this is a 5-minute chart. Whenever price pushes to a new high, what you should always be looking for is, well, where was the V before? Price pushed to a new high here, okay? Where was the V before? It's there. Price pushed to a new high here. Where was the VB? Oh, it's the same. It's still the same VB. Price pushed to a new high here. You look left. Where's the VB? It was there. That was the level. Okay. You're always looking to identify whenever you're pushing to new highs, what was the V before the high? Okay. What was the bearish V before the high? And the same way you'd flip it for in a downtrend. And the whole idea being is that once price trades through that VB, well, then basically it's triggering those orders. We are into a new market environment and we should get ready for a possible reversal. And that is what we're looking to use market structure to identify the opportunity for a reversal off here that allows us to make our move. Okay, and we'll look at this a little bit more in detail over the next few slides. So, the flip side, as I said, we just looked at particularly at what is effectively identifying the ultimate high, price coming back and trading through the bearish VB, the V before the high, the bearish swing point before the high. But on the flip side of it, if price has been in a downtrend, once you've identified your ultimate low, then as soon as you push to any new low, okay, this here, it's pushed to a new low, it's broken here. As soon as we push to a new low, we look left and find with an ultimate low, the bullish swing point, the last bullish swing point before the low, which in this case is here. Okay, this was the low. Where is the bullish swing point? It's there. Once again, it just happened to be a fractal because actually this level here, this point here, was basically higher than the 2 candles before and higher than the 2 candles after. Doesn't have to be, only can be a swing point. It just so happens that this is a fractal as well. Let's just clear this. Because actually what we're looking for is when you project that level forward, once price trades through it, as it does here, by even a pip, then we're into new market conditions. All right, we're into new market conditions, and this is what might provide us with an opportunity to basically get into what could be the new uptrend. This is the opportunity to enter it at its earliest point. So that was it for, once we've had an ultimate low, if we've been in a downtrend, looking at how it could reverse. The opposite is literally just the opposite of what we talked about on the previous slide about, once we've reached a high and then looking for the the last bearish swing point. Once it trades through it, well, then we're starting into to get interested into how we can identify the sort of the price move off it. So, here's an example. This is pound Aussie in the daily chart. All right, pound Aussie on the daily chart. Price pound Aussie has been in a downtrend. Okay, every time it makes a low. Okay, every time it makes a low, like here, you look back. Where is the last bullish swing point? It's there. Project it forward. Okay, every time that's what we're looking for. And in this particular case, what we hear is we push down to this low, and interestingly, we push to this new low. This becomes, our ultimate low. And so we're looking back here. Where is the bullish swing point? Okay, where's the VB before the low? That's what we're always looking for. Where is the bullish point? Point before the low. Yeah, as I said, we've just identified it there. Okay, look back left, identify the last bullish V before the low. Just so happens in that case, it was a fractal as an up fractal as well. But once we have that level, we're interested to see how does price react to that level. And in this particular case, what we saw was price reversed. It traded through that level, and then basically price came back. And what happened is we found dynamic support from the 20-period moving average with an awful lot of bullish pin bars to give you your first entry. Price then comes back, and then you get the opportunity for what's known as a second shove into the new trend. All right, so we have been in the downtrend. Once we see identified, whenever we pass to a new low, we look for, that next VB. Once that's traded through, if it's not traded through, well, then the existing trend is still considered in place. But once it is, well, then actually that market structure has been broken. That market structure has changed. We are into a new trading environment. And with that, that's what we're looking for to give us an opportunity either to take the first shove or the second shove, depending upon your risk parameters, depending upon your analysis skills, etc. Also depending upon what the price action gives you, as always. But that's what we're looking for. Okay, that's how we're looking to use simple price action. When price pushes to a new low, always look for where was the bullish V before the low. Once price trades through that level, watch, we are into new environment, and now we're looking to see, will there be price action that will support us in basically looking to sort of trade the reversal and to go bullish in this particular case. So quite simple. Okay, quite simple. I appreciate if the first time you hear it, it might sound a little bit challenging or a little bit confusing, but I assure you, take a little bit of time. Okay, just go through some charts. Okay, start to look at identifying where was the highs, where was the lows, where were the bullish VBs, where were the bearish VBs, and you'll be surprised how quickly your understanding of market structure, how quickly it will accelerate and change. So, as always, I like to give you a few takeaways to sort of embed the learning and move yourself forward as a trader. So, after this, go away, take a look at some of your favorite trading instruments, and identify your favorite trading time frame. As I said, I have mostly focused there on your monthly, weekly, daily charts, but you could be on hourly, 15-minute and 5-minute charts. Okay, if you're an aggressive intraday trader. Look for periods when the instrument was trending. All right. Were you able to identify good trends using market structure, which is something we will do in a future session using market structure to trade trends? However, take a look and see, were there good reversal opportunities based upon those breaks of structure? Were you able to identify where the ultimate high was and then where the bearish VB was, and what actually happened once price traded through the level of that bearish V before the high? What actually happened? We were into a new market environment. What actually happened? Just take a look at the price action. You might be fascinated by what it shows you, okay? And it might sort of unveil new ways to look at price action charts, to identify market structure, and most importantly, to look at how you can use market structure to start creating a simple, in this case, reversal trading plan. So Wakas was then, is this webinar session available to download? Yeah, what happens, Wakas, and I apologize if I've not pronounced your name there correctly, I do apologize. Yeah, all of these sessions are recorded, and then what will happen, you'll probably find in maybe 10 days or so, and maybe sometimes sooner, sometimes later, you'll find that they will go onto the webinar archive on the ActivTrades platform on the website. So be sure to check that out. Be sure to have a look, and you'll find them all on there. Before we switch across to the charts to see how the markets have been opening up, all right, for the American session, just remember, in conclusion, Money Market Matters is here to support you in your trading through 2024, every Monday, 2 o'clock London time, providing news, education, and insight to active trades, tools, and markets. It is going to be an interesting year in markets. It already has been, so I hope you'll join us to help enjoy and make the most of that journey. When we start to look at market structure, really, market structure is just a way of defining a simple way to analyze markets and identify trends to trade or identify reversal opportunities. What helps us is it's important for us to establish what phase the market is in, okay? Is it in an uptrend? Is it in a downtrend? Is it transitioning? Is it just range bound? Because very often, by identifying those present market structure levels, it gives us ways to either join the trend or, as we've just talked about here today, how we could look at for a reverse. Paul said, okay, yep, I will check up on that, Paul. I know we've had a couple of challenges with technology, but yep, I'll just check out with the team and make sure they're updated for you. Okay, thanks for the heads up. But as I was saying, we want to identify present structure levels within markets. One way to do that is to identify the V, okay, this last bearish swing before a high or the last bullish swing before the low, because this can help us identify levels, structure, which when broken gives us the insight that we're into a new trading environment, and that in this case can help us identify possible reversal trade setups. I looked for a trade setup of my own called the Vulcan, which is probably my favorite one in terms of being able to help trade reversals. So without further ado, let's go and have a little look at the live markets and see how we've opened. All right, so we're about 15 minutes into the opening of the market. As always, just before we do, just a reminder, okay, next Monday, 10th of June, we're going to be talking about trading trend reversals. So this session today is kind of almost like a nice lead-in to trading trend reversals, and we'll talk about that in more depth. Okay, so I hope you'll be able to join us. If you've not already registered, you can see the QR code is on there. It'll take you to it, that you can do so and join us for that, and we'll go a little bit deeper. Okay, super. Thanks, Gus. Thank you. Okay, so as always, if you've got any questions, if you've got any comments, maybe you've got feedback, maybe you've got topics you'd like to see me cover, well, you can get in touch with us, okay? English desk at activetrades.com, or give them a call, 0207 6500 567 there, okay, for the London office. So if you'll bear with me for a moment, I'm just going to switch across to the live charts, and let's see what's been going on. So just bear with me for 1 moment, ladies and gentlemen. As always, let's have a little look at the indices to begin with, and then we might have a little look at some of the other charts that might be of interest to you. Just always like to try and give you a little bit something you can take away and work with. Okay, so bang, let's have a little look at the boom. Let's have a little look at the Dow here. So I'm just going to sort of talk about a trade setup here, namely, let me just use my drawing tool here. Price was in an uptrend here. Price, this was an ultimate high here, pushed higher than this previous high. So of course, remember, what do I do? Whenever I see the previous high, well then invariably I'm looking for where was the V before it. That was here. Just so happened that that price action was also a bearish engulfing candle, key reversal candle. So I'm thinking, hang on a minute, here we go. And then actually what we can see is price broke that VB level, came back up to test before we sort of dropped all the way down there, didn't we? Dropped all the way down, and that's basically that allowed us the opportunity here to sort of get into the new trend when you look at the kind of a little bit of the lower a little bit of the lower time frames here. So let's just bring that up just as I'm looking at that here as we speak. So here we go. Just looking to try and see where we're going here. Boom, boom, boom. Okay, so the 4-hour chart here is, this is here. We printed a bullish engulfing candle at the start of the week, but that was also the low. So as always, remember what I was saying is, once I'm looking for where's the swing point. Well, actually, it was all the way up here. That's really if you look at that, all of that is in a trend, isn't it? It's in a very nice trend. And here we're into this. We're just going. This is just sideways. Okay. I'm looking for where was the, once we printed that low, where was basically the clear swing point. Okay. And that was here. So I'm just aware of that. Just take that on board. Just be aware of that and the way it might play out for this week, because as I said, we've got a really busy week with news, and should we basically come in and trade through that later on in the week, then I'll start to get very interested. All right. So just that was there. So let us have a look at how we've started off this week. Just bear with me one moment. Bang. As always, I'm just interested to look at what kind of levels we saw that we had. Friday we had a real big bump up there. Okay, and I'm just now looking at these were the lows. These are the lows for the session today so far. We're looking at breaking that. That's of interest to me. I'm just kind of watching that, see how that plays. Let's have a little look down to the 15-minute chart, so we can see the lows of the day so far. This is on the Dow. We're breaking through that on the opening. So as always, I'm looking to see, we're pushing to a new low there, aren't we? We're pushing to a new low. But the thing is, really here, if I look at that pushing to low, where is the VB? Where's this? That's still up here. Okay, that's still up there. So it's quite a distance there. As you can see with the normal kind of ranges. But even if we have here, that was the low before the news. That was the low there. I'll be looking at there we go. And then once we broke it, see how we broke it there. Okay, we come back into it, and then we moved off it. Okay, one shove, two shoves, and then into news. All right. So I wouldn't be recommending you necessarily trading that, because this is like the hour before the market opens, but just to show you how quickly being able to read and identify that market structure can help you just make sense of it once we look at it. So Dow is pushing to the new lows there, isn't it? So let's just see. You hear me always say that I always like to see it when all the indices are operating together in unison. So Dow is open by pressure to lows. Nasdaq is doing the opposite, isn't it? Nasdaq is doing the opposite here. Okay, so yeah. So what I'm interested in here, let's just draw here. That was the high of last month. This is the daily chart. So I'm looking at, where was the swing? That was it there, wasn't it? That was the VB. We broke that last week and came back up. So I wonder now, is this going to be a case of we're going to come back up in here and then move down? Myself, that's what I'll be looking at. It'll be the start of the week analysis, and then I'll be looking to sort of see how does that play out during the week. How does the week follow through on that? Let's have a little look on the intraday basis. Clear all these drawings down. Let's go down even more. Okay, so in the same way we said, Dow is effectively just going higher, going lower. The Nasdaq started off higher. You can see it did that, didn't it? Here we go. Let's zoom in. Started off higher, but now it looks like it's reversing over as well, isn't it? Boom. So here we go. Let's just use what we talked about. Gosh, this was the high here. This is the ultimate high, isn't it? So as soon as I see the ultimate high, I'm looking for where is the low. Where's the VB? Where's the bearish? It's here. Okay, this candle here, it's lower than the candles before and after it. We've just traded through that. Okay, we've traded through that. So we're into a new market environment on this kind of 5-minute time frame, and I'll be watching to see how does that play out. I'll be looking to see does it come down to previous day's high and then come back up. That's what I'll be looking for. That'll be my kind of scenario for the start of this session. It's always a little bit of a as I said, the start on a Monday can always be a little bit volatile, all right. But at least now we're starting to look like we're all starting to drift lower, aren't we? You can see the Russell that's drifting lower as well, and even the S&P. Okay, S&P just not really done much today at all, has it? If you look at that, it's just been really kind of been quite a. If I look at the kind of highs and lows of the day so far, it's just been a little bit of a dull range there, really, hasn't it? S&P. There we go. It's I need to just tighten up that line a little bit. It's not just drawn a bit crooked, but I'm just going at pace, trying to get as much as I can in. Here we go. So bosh, let's go here. 5-minute chart. Let's just look at this. So this was the high here. We pushed through that. That's that's the high of that period there. So of course, what I'm looking for is if I've got a new high, where's the low? Let's see how low here. It's also a fractal. We've just traded through it. Okay, we've traded through it. So we're into new environment. That's what I'll just be watching here. Let me just clear this down. It's gosh, that's through there. So here we go. Let's just put this down so we can all see it here. What I'll be looking at is here. Woof. We can see that basically it's trading through those levels, comes back up off it, trade through those levels, come back up off it. That was the high. There we go. These are the levels here. I think if we looked at how that's gone there's kind of like just basically pulls back and then it pushes again. And I think that's what I'll be looking for on the SP and the Nasdaq. Does it push through, come back up, push again? That's what my scenario would be, looking at that. Certainly the Russell is falling quite considerably there, isn't it? So yeah, that's what I'll just be watching. Let me just get rid of this drawings and stuff so you just see the price action a little bit better. As I say every week, I normally wait for about 20 minutes after the market's open, just let it go a little bit wild, the start of the week, start of the session, and then start to sort of take a view on what's happening. But yeah, let's say it's a bearish at the moment, but I suspect what we'll do is we'll get a little bit of reaction, having broken through some of these VBs here and stuff. I think what will happen is there'll be a bit of reaction. Let's just look at this. Gosh, let's see how this goes. All right, I would be reaction. That's what I'll be looking for. The kind of bit like what it did, and the Dow's kind of leading the way. The Russell might even be faster on the way it's going because it's just been dropping its way there. But even if you look at that Russell there on that chart there, that's the high, isn't it? The session. So you're looking, well, where was the VB before it? It's broken it, so into a new environment. It's actually broken that as well. So I'll be looking to see, does it come back up to into that area before it drops again even on the 30-minute chart. But I think it's fair to say the Dow is probably leading the way. I'll be looking at that Dow there. Let's see. Gosh, let me just see what this is. Yeah, the Dow's really falling there, isn't it? Let's see if we can have a little look at so it just to add for what we're talking. This is the 1-minute chart. Every time we move to a new low, I'm looking right. Well, where is the VB here? There's the V there. You see how it's a fractal, but that's also the V. So I'll be looking for, until that's broken, we're still looking on the bearish side. Okay, so it wouldn't surprise me if the 1-minute chart here that's looking like you'd be looking for basically for it to maybe to do something like that if it was going to reverse itself properly. Clearly, this level here is of interest to us, but yeah, this is updating. So every time that's a bullish key reversal there. So that is on the 1-minute chart. Even as I said, once you identify this, you can start to look at it being on all time frames, all instruments. I would just be looking and stuff to see how that's the level of that was our VB there, isn't it? That's the last bullish swing before the ultimate low, the most recent low that we've seen there. Okay, if you think about it, when we made this low here, the swing of it, the VB was up here. All right, and it hasn't broken that. So even though what happened is we pulled back, it pulled back into what is effectively a bear flag, and then it works its way down lower, doesn't it? And I said every time you make a new low, you'll be working out where is the VB, okay, until it breaks. So it's looking like it's having done that. But as I said, I'd need to see it's up basically maybe doing that. Okay, if we're looking at that, if it's going to be that kind of strong move. So there's plenty for you to watch over the next 5-10 minutes. I think it might be an interesting start to the week. Remember, as I said, we've got American news out all week. You've got American PMIs at 245, and then and at 3 and stuff. So I would probably just wait for that news to come out and then look at engaging after that. So I think that's where we'll face. Let's have a little look at the Nasdaq. Yeah, it's come down to yesterday's highs. Sort of said we would look at. Let's have a look at interestingly. So I've just gone down to the 1 minute chart. 1 minute chart there. Draw for the Nasdaq here. So when this pushed to low, you're looking for where's the swing, and it's up here, which is a long distance away, isn't it? But when we push to this new low here, well, where's the VB? That's there. Okay, push. It's there, which I think was also that withdrawn from when we reached the high, and I think it was 15 minutes, 5 minutes there. So clearly that level there, what's that, 18,696 is a level of interest there. So what I'll be looking for here on the 1 minute chart is we push to a new low. That's the VB. What I'll be saying is, it needs to basically break above that to give me that time based upon that. That's the kind of level I'm interested in to watch how that plays out. So as I said, I think it's going to be a rather interesting the next hour or so with the news and what have you. Let's see if that kind of 3 o'clock news, whether that kind of gives it the shove and stuff. We're clearly this first half hour, we're being knocked about between the news and the market. There we go. Push. So it's broken a back above it. Bang. There we go. Now watching, you'll be looking at where are those levels that we drew on. Are they going to get broken because of the news, and then we'll be back into a new trading environment. Gosh. Okay, ladies and gentlemen, there we go. Sadly, we've run out of time. As they say, time flies when you're having fun. But I hope today's session on working with market structure and identifying to see where possible reversals may occur, that has given you just a little something you can take away and work with, something that you can just basically take on board. Next session, we'll take it a little bit further, looking at more trading reversals. I hope you'll join us for that. Remember, Monday, 2 o'clock London time. Until that Monday, I hope you have a fabulous trading week, and I wish you the best of success in your trading endeavours. And I will speak to you soon. Take care and trade well, everybody. Cheers.